Hi and welcome to this week's Property Insider video. Today Dr. Andrew Wilson and I discuss a recent 60 Minutes program that told us that our housing markets are one of the strongest in the world, yet the most unaffordable, and they suck the life out of first home buyers. We'll tell you what's happening on the ground and give you a slightly different view. As well as that, we're going to share with you a new initiative from the New South Wales government that may help first home buyers, and of course give you an understanding of what's happening around our property markets. So if you want to keep up to date with what's happening in real estate, why not subscribe to this YouTube channel and click the little bell icon to keep you up to date with what's happening. I spent some time over the recent long weekend responding to a number of trolls on our YouTube channel who keep telling me that our property market's about to crash. So I asked them to have a look at the weekly discussions Dr. Andrew Wilson and I have. We've been having them for over 3 years now, and it was a bit of a worry. It was a worry because of how accurate the forecasts of Dr. Andrew Wilson were. He made these regularly in these sessions, and how wrong much of the mainstream media was. It's also a worry that at a time like today, when there's never been as much information freely available about our property markets, that there's still so much financial misinformation out there. Of course, the good news is in these regular weekly chats I have with Dr. Andrew Wilson, who's Australia's leading housing economist, the good news is that how right we were about the economic recovery, about beating recession, about unemployment coming under control faster than many expected, and about the resilience and strength of our property markets. Now, interestingly, I've been having similar discussions with negative Nellies for decades, and over time I've decided it's just not worth trying to persuade the perpetual property pessimists. But the media keeps feeding their fears. So today I'd like to discuss a recent 60 Minutes program that told us that our housing markets are one of the strongest, yet most unaffordable in the world, and how they suck the life out of first home buyers with frustration, with heartbreak and with hopelessness. By the way, that's a story I've heard for close to 30 years now. It comes around every time our markets start to rise. So here we are again. The same story's doing the rounds again. Hello, Andrew.
Yes, Michael, it's a little like Groundhog Day, isn't it? But you would start banging your head against the wall if you weren't as sane as you and I are and hadn't had the experience that this continues, and it's worth a bit of a laugh. But you make two really good points there. The first is that we've never had so much information freely available to us. We really want to understand what's happening in our housing markets. There are plenty of data points and I guess a number of points of view, and those that are supported by robust data that you can sort of take hold of. The problem is that if you do listen to the negative Nellies and act upon those forecasts of house price crashes, etc., then you obviously end up losing, as you would have over the last, as you said, decade or more, since we've had this never-ending stream of doomsayer information. And as I said, at least the data's out there to make a rational choice or make rational decision makings. But look, it does generate clicks, obviously very highly focused housing markets, and you can't blame the media from wanting to draw as much attention as they can. At the end of the day, it's not their credibility, it's the credibility of the commentators that they use on these shows that really is at question.
It is. Well, before we get into the first home buyers and affordability in general, let's have a look at the auction markets, because despite the Queen's birthday long weekend, there were some great results around Australia.
Yes, a trend continues quite clearly, Mike. We had another record day of auction activity in Melbourne and Sydney. Now, I'm talking about a record for the Queen's birthday Saturday. It was so far above the next highest number of properties going under the hammer on the Queen's birthday, which was back in 2015, that it just shows you how remarkable this market is, and really no significant signs of slowing down. Certainly an easing in the market. We can see that. But we've got two factors at work in terms of gradual slowdown. The first, of course, is time of year. It is winter coming up. It is traditionally a quieter period in our housing market, the winter selling season. People are distracted. They start thinking about putting off their buying and selling decisions till spring. And of course, we do see fewer listings coming into the marketplace. We are seeing that now, down around about 12% new listings over the last 3 or 4 weeks, Michael, and that's no surprise. Of course, higher auction listing numbers are all about decisions that were made 4 to 6 weeks ago. The newly listed data shows us that there is a gradual slowing down in new listings coming into the market, but sales numbers are still holding quite strongly. And when we look at clearance rates on the weekend, Michael, despite record numbers of properties going under the hammer in Melbourne and Sydney, we still had quite strong clearance rates, certainly well in favour of most sellers. Sydney market was under 80% for the first time this year, but again, buyers, sellers a little distracted because of the long weekend. And Melbourne was also at lows for this year so far. And again, those holiday distractions play, and as well as the surge in supply. But I wouldn't read anything into these results in terms of the market switching to buyer's market anytime soon, Michael. I think the other thing that we can look at our auction clearance rates or our auction clearance rate data, Michael, which is very interesting, is in Melbourne, the number of withdrawals was actually what you'd call at a more or less a normal level. In fact, we're still in the second week of shutdown, or were, even though restrictions have eased now, thankfully, marginally. But the number of withdrawals was quite low. And if you remember back last year during lockdown, withdrawal numbers, once the lockdown was announced, were sky high. So I think that shows the industry, as well as buyers and sellers, are adapting to other ways of marketing their properties and other ways of purchasing a property. And of course, what we're talking about is online marketplaces. And they've obviously been quite effective, because still quite positive clearance rates there in the Melbourne market. But we will start to see an easing in numbers coming through, Michael, although really it's coming from a very high base, a record base. We started June off with the highest number of auctions for a June Saturday in Melbourne and Sydney on record. And now we've had the highest number of Queen's Birthday Saturday auction numbers. But I would expect those numbers just to start to ease now as we move through June. But still a very strong market, Michael.
Sure. You made a hint that listings have dropped. You're keeping track of that clearly with My Housing Market.
Yes.
What are you noticing with the number of properties coming onto the market?
Well, that's what I'm sort of pointing at, Michael, that newly listed properties, that's the number of new listings coming into the marketplace, the number of new properties for sale, not brand new, but newly listed, has fallen around about 10 to 12% over the last 3 or 4 weeks. And that's clearly a sign of that distracted market energy. And of course, the other factor there is that we've had record numbers of buyers and sellers in the market this year so far, Michael. So people have satisfied their needs. Their demand needs have been satisfied. They've purchased a property. We don't have strong international migration to keep fueling increased demand, although obviously there's interstate migration, which is influencing housing markets, particularly influencing southeast Queensland at the moment. So as I said, that satisfaction of demand is well underway, and that's another reason why we will gradually see fewer transactions and property numbers coming into the market. And that's what we're seeing now, but I think it's more of a winter hiatus. And as we'll talk about shortly, affordability is still very positive in the marketplace, and that's why we're continuing to see prices increase.
And currently there are still more buyers there than the number of properties available, so they're soaking them up pretty quickly. That's one of the themes behind the recent 60 Minutes story that I mentioned in the start. Way back in 2018, I remember, Andrew, 60 Minutes ran a controversial show. Apparently it was their top rating show for the year, where it scared homeowners when it ran a headline, Aussie house prices could fall as much as 40% in the next 12 months, 40%. And recently they ran a show saying Australia's housing markets is one of the strongest, but most unaffordable. And they suggested it can suck the life out of anyone who's spending every single Saturday, dragging themselves from one auction to the next, being outbid at each turn. I didn't watch the show, but I saw the shorts of it online. They gave a case study of a Melbourne family who were hunting for a house for more than 4 years without finding one. But Andrew, interestingly, this family had a budget of $1.5 million. Really? Now, I know you haven't watched the show, but we both know there are a record level of first home buyers out in the market at the moment. What are your thoughts?
Well, I didn't watch the show either, Michael, but it's sort of swings and roundabouts, or the roller coaster ride of negativity. 2 years ago, 3 years ago, it was all about house price crashes. Didn't happen. In fact, prices increased by double figures rather than fell by double figures over that period. And now it's about, prices are rising, but it's creating this terrible problem of unaffordability. The facts don't really support that. There's always a number of measures. I mean, what's affordable to one buyer might not be affordable to another buyer. And talking about a first home buyer, I think you said with a budget of $1.5 million, holy moly. That's a pretty unique first home buyer, I would suggest. And when we look at the first home buyer data, we've had the most consistent period of higher levels of first home buyers over the last 18 months to 2 years that we've had in our history. Now, it's not the highest level ever, Michael. Let's be clear. We had much stronger levels of first home buyers in 2009 as courtesy of the Rudd government's first home buyer grant boost. which brought really hundreds of thousands of first home buyers into the market. But that had a cut-off period, and it was a surge that brought forward a lot of demand. So 2009 was a spectacular year. First home buyers have been in the market because it's affordable. It's not just the incentives that they have been given, but it's the fact that prices really have gone nowhere since 2017. And that means that they've been able to keep up with their deposit saving as prices were flat. That's the reason there. But first home buyers are now being crowded out of the market because of higher prices. So affordability for first home buyers is clearly waning, but it's still quite high, Michael. The market share for first home buyers is still well above average. So they're still finding a way into the marketplace at near record levels. So we don't have to give up hope, not in the shorter term, for first home buyer activity. Eventually that prices growth will push out first home buyers. We are seeing more investors come into the marketplace now, which also acts to squeeze out first home buyers. But it is all about higher prices and affordability. But affordability, as I said, is still positive, not just for first home buyers, but across the board. My Housing Market produces a housing affordability index, which measures the proportion of the average repayment of the average loan as a proportion of average income. So that's real affordability, is it not? Because it shows you whether you're paying more or less from your average loan on the average repayment. Even though we've seen that starting to tick upwards, the affordability index, so it's becoming less affordable, no surprise, it's still, in every capital city, Michael, is still well below the long-term average affordability index levels, except in Hobart. Hobart is the only capital city where its unaffordability is higher than the long-term average for that capital city. But of course, the other issue with so-called unaffordability is that we've never seen so many buyers coming into the market. We've had spectacularly record levels of owner-occupiers, near record levels of first home buyers, but overall clear record levels of home buyers in the market, owner-occupier home buyers. So if the market was unaffordable, Michael, where are they getting their home loans from, for goodness sake? And the other point is, if the market is unaffordable, as 60 Minutes, I guess, and their supporting commentators are proposing, then what are the banks doing providing loans that are unaffordable? You know, that's not their brief, particularly as the RBA has said, well, we're watching you very carefully, banks, that you don't moderate any of your lending practices. Are they moderate? Is this what's being proposed, that lenders are undertaking risky lending? Well, we need to see some data on that one, Mike. This market is still affordable, obviously as an aggregate measure. There are people that are being squeezed out of the market, but that's about a couple of things: individual capacity, but also individual choices, Michael. And people may choose to want to live in a particular area, particular house, and they have to, I guess, pay the price for that. And if they can't afford that, they then have to moderate their choices. But certainly the fact is that affordability still remains in most capital city markets below the long-term average. And all that means succinctly is prices will continue to rise, Michael. I just want to add one thing in terms of affordability. And I noticed that there's a measure that compares the value of Australia's residential property with the value of our annualised GDP. And the data shows that the value of residential property is about 3 to 4 times higher than our GDP. And that's supposed to, again, reflect, oh my God, isn't Australia so unaffordable? Well, that's nonsense, because globally, if we look at the proportion of residential real estate assets compared to global GDP, it is lower. It's about twice that of global GDP. But that's talking about all countries, Michael. When we look at the scale, Australia is around mid-placed positioned in terms of that measure. So I'm sorry, guys, there's just no big deal about the fact that we have our real estate assets, our residential real estate assets are 3 times to 4 times that of GDP. Well, so what? It's just about there everywhere else anyway. And globally, it's 2 times that result.
The other thing is you've got to be realistic in what you can start off with. So this particular couple in the TV show had a very strong budget, but I found many first home buyers are looking for the sort of house their parents took 30, 40 years to be able to afford as their first house. Your first home won't be your forever home, so at least get a foot on the property ladder. And we've seen that currently there are more incentives and more ways first home buyers can do it than for a long, long time. In fact, recently the New South Wales government brought up a concept of offering a $25,000 grant for first home buyers in part of their stamp duty overhaul.
Well, that's right, Michael, and this was always going to happen. I mean, this is a very controversial new tax proposal. What it means is that all homeowners will have to pay annual land tax. The benefit for that is that the offset for that is they don't have to pay stamp duty when they purchase a property, but stamp duty is discretional, Michael. If you don't purchase a property, you don't pay stamp duty. And stamp duty is basically loaded onto the price of a property anyway, because you can't buy a property unless you can afford to pay the stamp duty. So it works its way through the food chain in that sense. But of course, governments love a regular new tax every year, every household, you beauty. But they have to obviously take account of the repercussions in terms of some people being marginalised through this land tax. And that, of course, are first home buyers who under the current tax rules don't have to pay stamp duty at all. So now they're going to have to pay an annual land tax in lieu of something they never would have had to pay before. So the New South Wales government, in their wisdom, have decided to give a $25,000 grant to first home buyers. Well, is that indexed? Will that rise as house prices rise? Are there any income restrictions for that? We need some more details on that particular proposal, but it'd be one of many, I believe, modifications, ways of getting this tax in to offset what will clearly be a number of issues that disadvantage, I believe, quite a considerable number of homeowners by now having to pay that annual land tax, replacing what was before just a tax which was discretionary, which is stamp duty. So, but anyway, like I said, it is nirvana for state governments, that annual land tax on everybody. But interesting, of course, we're not having the introduction to that tax until, I would suggest, all the energy is being sucked out of this record-breaking Sydney market.
You can't imagine the government wanting to give up those stamp duty receipts they're currently getting to help them balance their budgets. But the New South Wales government predicted the reforms are going to boost the state economy by $11 billion over 4 years, as money otherwise spent on stamp duty is going to be funneled back into the economy. But I don't know a government that's actually been reducing their tax intake. That may be a short-term benefit for homeowners and first home buyers, but I think it's going to be a long-term benefit from the government as they keep reaping the rewards year after year after year.
Well, it's the old story. All governments want a broad-based tax. That was what the GST was all about, Michael. Consumption tax, which we introduced 20 years ago. And that took a lot of energy and a lot of political capital to introduce that. And now state governments want to get onto that particular bandwagon. We just have to look at the ACT government. They've introduced a land tax in replacing stamp duty, but it's such a convoluted process they've done to try to get it introduced with least amount of negative issues over a long period of time. And that just reflects the fact that they understand that this has repercussions in the shorter term. There will be losers, and the ACT government has taken that longer term view to introduce it. But I'm surprised there hasn't been more negative political energy as a result of this. People will realise it once it's bedded down, and maybe the government will pay a political price at some point of time. But who knows? We're doing okay at the moment in our property market. People might feel that this is all right, and it hasn't had a lot of focus. And perhaps it's also supported by a number of the typical talking heads, the economists, who just love that, to be able to reap the benefits in terms of government taxation of our very robust property markets.
Well, you were saying we're reaping the rewards of the property market. The wealth effect is coming in. Many of us are feeling better because the value of our homes are going up. And I think the government likes that. It knows that means we're going to be spending more and greasing the wheels of our economy. There's some interesting data coming up this week. So I look forward to our chat again next week when we can break down what's happening in our property markets, Andrew.
See you, Michael.